All right, we got our weekly stock market update. Another strong week in the market. A lot of green all over the place. We've got a lot of tech earnings that happened this week. I'll be doing a separate video on some of the tech names or just some of the earnings from the week. I did a separate video on Amazon, so if you're interested in that, go check that out. But we do have a lot of strong green moves this week. So Meta up 9%, Microsoft up 12%, Oracle 10%, Palantir another 14%, Netflix another 5%, Nvidia up 7%, Broadcom up 9%, Tesla up 10%, Eli Lilly is down, Chevron is down, and UNH is also down. So a lot of those names that were down were earnings related. Apple also down on the week, down about 1%, Google down 0.5%. And Amazon up 1% on the week. When we look at the ETF heat map, bright green. So ETFs all over the place. S&P was up 3.5%. The Nasdaq up 4.5%. You have gold down slightly this week. You've got the bond market down slightly this week. And you've got currencies up, Bitcoin up this week. So let's take a look at our charts here. Let's look at the S&P first. So what are we, 9 days? 1, 2, 3, 4, 5, 6, 7, 8, 9 green days in a row. Pretty unbelievable recovery for the drop that we had early in the month last month. So on the month we are up for last month, for April. We started off way down and we climbed ourselves out of that hole. So the S&P is quickly up 18% in the last 3 weeks. So pretty unbelievable performance. Congratulations to everyone that bought the dip in this pain and uncertainty here. Now, are we out of the woods? Who knows? But this market looks very, very strong. And last week we did talk about this purple box. This is the Liberation Day gap. You can see the S&P is still just about halfway through that gap. And when we look at the Nasdaq, I believe we are well above, we've cleared through that Liberation Day gap. So Nasdaq showing a little bit more performance there. And that's because it's not being weighed down by some of those oil names, healthcare names. And there's the market closing. But the Nasdaq is up almost 23% from our recent lows from last month. So a quick 23% on the indices. Pretty unbelievable moves that we're seeing here. We're really just back to where we were last month. But that was quite the whipsaw. Whipsaw down, whipsaw up. It was a very flat, fast move down and a slow grind back up, with a lot of choppiness there within those first couple of weeks. Let's take a look at oil and gold real quick. So we've got, let's take a look at WTI. Oil is making another move back down. We're at $58 per barrel. So that's going to be good for inflation purposes. That's not going to be the best thing for some of the oil names. I did see that Chevron, or one of the oil names, XOM, they announced that they're going to trim back on some of their buybacks. So their free cash flow for these oil names is going to continue to get hurt as oil is under a certain level. So some of those oil names I'll start to look at if we get into this green box around $45 a barrel. I may look at scooping up some of those oil names for long-term holds, because they do pay a nice dividend and their cash flows are pretty consistent. But I want to see those get a little bit more beat up. And when we look at gold, gold is also down on the week, but still in a very nice long-term uptrend. Hit its high at $3,500 and we're at about $3,200 an ounce right now. Let's take a look at the bond yields. So the bond yields had a nice move down the last couple of weeks, or last week and a half, and we've got a big move up the last 2 days. Some of that is due to we had a nice jobs number this morning, so the jobs report was much stronger than expected. So that is making the likelihood that the Fed cuts next week Basically, I think the odds are 1%. They're not going to cut. They're in a hard spot right now because they're seeing some things for inflation really fall off a cliff, but they're seeing the economy and the jobs numbers still be good enough to where you can't really justify a rate cut, but then you're also getting the pressure from the administration to cut rates. So it'll be very interesting. They're meeting next week, but strong move back up on the yields the last couple of days. 10-year yield around 4.3, but we're still really just chopping around here. We've been in this range for quite a while, chopping sideways on the rates. Some individual names. Amazon, not doing a whole lot here this week. Really didn't move after earnings. You've got Nvidia making a nice move up here. So I kind of cleaned up this chart a little bit. We're still in this downtrend here. This is actually looking ugly. But this shorter term downtrend that we kept getting rejected here, rejected, we've popped up above that. And some of this is due to the big tech names all said they're going to keep spending, which means keep buying Nvidia chips. So it'll be very interesting to see if Nvidia can make some higher lows and get back into this trend like I've got on my squiggles here. So interested to see if we can make our way back up to an uptrend. Tesla not doing anything, also similar to Amazon, just going sideways after earnings. Their earnings were bad, but there's, I feel like, a little bit less headline news around Tesla, which is good. And we'll see where they go moving forward. But this has been a pretty steady resistance, this 290 level. Every time we get here, we kind of pull back a little bit. But we do have the robo-taxi event coming up, and we could see some optimism pushing us back over $300 as we get closer to that. Costco, nice rebound the last few weeks. We got over $1,000 here on Costco. This is my newest addition to the portfolio, Novo Nordisk. They've been getting beaten down due to some Eli Lilly data. That's their competitor on the Ozempic pharmaceutical drugs. But this is a crazy looking chart. If we zoom on out, it just made this parabolic run up. This is all the Ozempic hype and then gave back a lot of that hype. But the fundamentals for the business are still very strong, and they have earnings next week. So maybe I'll do a dedicated video on Novo Nordisk after they have their earnings next week. Apple earnings this week. Apple was down almost 4% today, but still a very nice recovery. Apple had a flash crash down there to 170 and has recovered pretty nicely since then. If Apple can get under $200, I may look to start a long-term position and keep accumulating if it's under $200. We're just one tariff announcement away from Apple making a big move either direction. I believe there was a headline that Apple's going to lose $900 billion if the tariffs stay in place. I don't know the timeline of that. Would that be for the quarter, for the year? But that's just a crazy number to hear. Like $900 billion could just poof. So I'm sure that's one of the reasons why the stock is down. Let's see here. Palantir, just crazy recovery. Almost back to all-time highs. Wow, just unreal. What's the move from the low? 50%. So good recovery for Palantir. They have earnings next week. Google, 165, pretty flat move after their earnings. Their earnings were really solid. Really good business here for Google. The SMH making a little bit of breakout of this short-term breakdown. So we'll see what happens here. But again, the spending from the big tech names should be very good news for these semi names. So the whole semi ecosystem, AI ecosystem, should get a nice little pop based on what we heard from these big tech companies. A few other names here. Netflix, phenomenal looking chart here. Probably getting a little overcooked in the short term, but Netflix doing great. Let's take a look at Microsoft. Really huge bounce after earnings. Huge gap Microsoft was up 10%, I believe, after earnings, and just leaving a huge gap here. Yeah, 10% after earnings. And who else had earnings this week? Meta looking nice here as well. I'll be looking at Meta also for a potential starter position if it's back around the 550. Really missed the boat here under 5. But also Meta doing a really good job. I haven't listened to their earnings call here, but their quarter was 42 billion reported, so they double beat there for earnings per share and total revenue. Snapchat had earnings this week. Spotify, this was another one. It gapped down after earnings, and then I looked at the earnings, and I couldn't understand why it was down other than the initial earnings per share shock of a big miss there. But they did great as well. So I'll go over all these companies' earnings in a separate video. But they quickly recovered from that gap down, and they're back near their all-time highs. This is a pretty crazy looking chart for Spotify. I mean, it just went through such a nasty drawdown. We had the pandemic lows shot up, and then we had a huge correction here, and just what a move for Spotify. And as everyone uses Spotify, I could probably count on my hand the people that I know that don't use Spotify. So earnings much better than expected, and guidance for a lot of these companies was pretty good. So next week will be an important week for the Fed. This week we had the unemployment rate come in a lot better. Non-farm payrolls, strong job growth. And rate cut is most likely off the table given the stronger labor conditions here. And we'll be looking to see if potentially the Fed will hint to quantitative easing instead of cutting rates, because they want to do something to get rates down. But you can't cut rates right now. And last time they cut rates went up because people were expecting inflation to rip its head back. And if you cut rates right now with the uncertainty of tariffs, I think you'll see that as we saw today, we get one strong jobs number and the rates kind of shoot up quickly. So the Fed may be hinting towards quantitative easing, buying bonds versus cutting the interest rate to get the rates down. So we'll see if that's something they put on the table. Let's see here. Earnings, we talked about that. So we're seeing some softness in the staples, but we're seeing very strong earnings for the big tech companies. So obviously the companies that are going to have more tariff uncertainty and potential recession uncertainty, those companies are hurting a little bit more versus the big tech companies where everyone's going to be using Spotify, everyone's going to be using Netflix, everyone's going to be using YouTube. People are always going to buy stuff on Amazon. People are always going to buy iPhones. So those companies are looking to be holding up much better than Lululemon, some of these other, Target, some of these other consumer staple names and retail names. Really no tariff news that I'm aware of this week. We're just seeing a lot of, we're talking, we're not talking, we might be talking, we should be talking, just a lot of headlines back and forth. But for me personally, portfolio positioning and outlook, I'm staying fully invested in core positions. I've added a small hedge in the form of covered calls. I don't expect a crash, but because we were able to scoop up some good names at in the downturn, and we've had a quick bounce back of 20+% in some of these stocks. Just a small hedge. I don't recommend anyone else do this, but just something I'm doing. I'm not shorting the market outright, but I do expect the markets to be higher a year from now. Now, do we go back down to where we were quickly? Do we just shoot right back up to all-time highs? Nobody knows, but I'm definitely looking to buy more stocks. I wish I bought more on those dips down. And I will continue to add money into my accounts every month, as it's just on auto pay to put money into these accounts. But I'm looking to buy some more deals when we get them. But right now I don't see a ton of deals. I mentioned Apple. If it gets under $200, that would be something I consider. And Meta under 550, those might be some new positions. But I'm still very bullish long term, and not going to make any rash decisions here in the portfolio. But we are at an inflection point with yields, the Fed policy, tariffs, and the technical levels in the stock market. I'm positioned to ride the rally with a little bit of protection. I remain bullish long term. And when we look at the chart here, like we talked about last week, we have a little bit of divergence with the Nasdaq being stronger than ES. Nasdaq blowing through the Liberation Day gap while ES is not. So there's a potential that we do see some people taking profits from the quick nibbles that they made down here. There's a potential for a tweet to shoot things up or shoot things down. We don't know. But this is quite the move in the market here. If you miss buying down here, we're still down, 8% from all-time highs, something like that. So I wouldn't be rushing in. 8% from all-time highs on the S&P. I personally wouldn't be rushing in to buy, but I'm getting cash ready to buy. I have cash ready to buy, but I want to buy when it's a little bit more optimal, like we had here in the past. So not saying we'll see these lows again, but we will see red days again. And when we get red days, that's when I will be deploying my additional capital into the market. And my shopping list is still intact. The name after earnings so far that I really want to add to is Amazon. I want to buy some more Amazon. Their guidance gave me a lot of confidence. So I may not get my next buy targets of 165 and 155, but I'm willing to buy some more in the 170s if we can get there. Nvidia, anything under 105, I'm an automatic buyer. So again, I may not see my next buy targets here of 85 and 75. Those were looking highly likely when we were here. And I'm glad we did take advantage of some buys on the way down, but we may not see those prices again. We may see them after earnings. Who knows? I have been accumulating some Bitcoin throughout this whole time, and IBIT has made a very, very nice move, and Bitcoin has made a very nice move. The whole crypto market is still a snooze fest, but Bitcoin is just a man amongst boys in this market. So Bitcoin looking very strong here. I feel like I'm going to close my eyes and we'll be back over 100,000 over the next few months, and we'll see if we can get past that all-time high. But the rest of the crypto market is very slow and just not worth any of my attention at this time. Anything else I want to talk about here? I missed out on some names like Uber. Very very nice move on Uber. These were some of the names on the buy the dip list, and boy, wish I pulled the trigger. But at that time, there was other things for me to deploy money in, like Amazon and Nvidia, and missed out on Uber. But there will be another time, so just don't feel FOMO. Don't feel don't do anything hasty. Have your long-term plan and just keep sticking to it. So that's it for this week's market update. We will see what next week brings us. FOMC meeting. And what else do we have? Unemployment claims on Thursday, PMI on Monday. And a lot of Fed heads talking. So we'll see what next week brings us. 9 green days in a row. Can we make it 10? Can we make it 15? We'll wait and see. So everyone have a great weekend, and look out for some of these earning videos coming your way. All right, peace out.